Welcome to Talk Tickers. Today, we're jumping on the tracks with Union Pacific to break down their Q4 2025 earnings call. And believe me, this quarter gave investors a real head-scratcher.
Okay, so let's get right to the big mystery here. On paper, it looks bad. Union Pacific missed on revenue, they missed on earnings. And just like you'd expect, the stock started tanking in the pre-market. But then, things got weird. It pulled a complete U-turn and actually closed the day UP on a massive amount of volume. So what in the world did Wall Street see that the rest of us missed in the headlines?
To really understand that comeback, we first have to dig into why the stock dropped in the first place. So let's take a look at the numbers that spooked everybody at the open.
As you can see, the miss was razor thin. Adjusted EPS came in just a single penny short. A penny. And revenue missed by what's basically 0.5%. In the grand scheme of things, that's practically a rounding error, but you know how it is in the world of earnings. A miss is a miss. And this wasn't even the number that had people really worried.
Now this was the number that really mattered. The adjusted operating ratio. It ticked up to 60%, which is almost 2 full points worse than last year. Now for a railroad, that's a big deal. A higher operating ratio means you're less efficient. It's costing you more to make every single dollar. And that is a trend that no investor ever wants to see.
So, you've got a miss on the top line, a miss on the bottom line, and your core efficiency metric is getting worse. How on earth did this stock end the day higher? Well, the answer is a masterclass in storytelling by management. They pivoted the conversation away from the financials and toward the one thing they had complete control over, how well they were actually running the railroad.
And this quote from the CEO, Jim Vena, just says it all. He basically grabbed the steering wheel of the narrative and told the market, hey, forget how you feel about those headline numbers for a second. Let's talk facts. Let's talk about how we're operating.
And here are the facts he laid out. Freight car velocity, that's how fast the trains are moving, was up a solid 9%. And terminal dwell, that's how long cars are just sitting around in a yard, was down 9%. Both of those are huge improvements. It was a clear signal to investors that, hey, under the hood, this machine is running smoother and faster than ever.
So with that really strong operational story in their back pocket, management turned to the future. They talked with a lot of confidence about 2026, but they also had to be realistic about some pretty serious economic headwinds blowing their way. And this is where they really put their money where their mouth is. They guided for mid-single-digit EPS growth and, this is key, an improvement in that operating ratio for 2026. The message to Wall Street was crystal clear. We know the economy might be rough, but we believe our own internal improvements, our self-help story, are strong enough to power through it.
And make no mistake, those headwinds are very real. Forecasters are calling for a pretty tough environment for the things railroads ship. We're talking flat industrial production, a drop in new housing, and softer car sales. That is not exactly a recipe for a boom in freight volume.
And as if all that wasn't enough to think about, there's this one giant X factor hanging over everything. The operations, the guidance, the whole shebang. And that's the proposed mega merger with Norfolk Southern. Yeah, creating America's first truly coast-to-coast railroad is turning out to be pretty complicated. The main regulator, the Surface Transportation Board, actually sent their nearly 7,000-page application back to them and said, nope, we need more info. That obviously throws a bit of a wrench in the timeline and adds a lot of uncertainty.
Of course, management was quick to try and calm everyone down. The CEO basically called it a short-term blip, just a normal part of the process, not a major problem with the deal itself. He was still really confident, sticking to their target of closing this thing in the first half of 2027.
So what do you do with all this? You've got fantastic execution on one hand and a weak economy on the other, all happening under the massive shadow of this merger. Well, it's time for the next call, where we put it all together and give you our take.
Looking ahead to next quarter, the playbook seems pretty clear. It's going to be the same battle playing out. Can Union Pacific's operational magic continue to cancel out weak demand for shipping? And floating above all of it, any little piece of news about that merger is going to be a total wildcard, and it will probably move the stock in a big way.
When you put everything on the scale, it's just incredibly balanced. You have the powerful internal execution story on one side, and you've got these very clear external headwinds and risks on the other. Because things are so evenly matched, we're kicking off our coverage with a market perform rating.
So what does that really mean? It just means the current stock price seems, well, fair. It's pricing in both the good stuff, management's execution, and the bad stuff, the economy and the merger risk.
Now, if you wanted to make a play on this, you could think about a pair trade. You could go long Union Pacific, but short a general transport ETF like IYT. The idea there is to try and capture the value from UNP's specific operational skill while protecting yourself from the macro trends hurting the whole sector.
All right, let's pull this train into the station with our final thoughts on the quarter. At the end of the day, the story of this quarter was a fascinating divergence. The market just looked right past the small financial miss and decided to bet on something else: management's proven track record. Investors are buying the self-help story, and they're betting that this team's operational excellence is enough to navigate through a sluggish economy and a very complicated road ahead. This is not financial advice.